Nifty is extending its cuts. The Sensex is now down about 45 points, or the Nifty is on the verge of breaking. Okay, it has broken the 10,500 mark. We have HDFC Limited, which is at the low point of the day. We have HDFC Bank as well. Both of them dragging the Nifty lower. We had a lot of these other stocks which were dragging lower, but now fresh selling has come into Vedanta as well as Tata Steel, which is at the low point of the day. The oil and gas index is lower because Reliance, that big boy from the index too, is at the low point of the day. Vedanta, remember, optically is a 7% cut also because it goes off, it goes ex-dividend today. So the Reliance stock, which has sold off from the top, is the one which is seeing a bit of a knock. Also auto stocks, they're not doing too well. We have Maruti, which is at the low point of the day, and Tata Motors too. But that's as far as today is concerned. This is the last day of Samvat 24. This is Mutual Fund Corner. So Sumera, how exactly has the last year been for mutual funds?
Well, it started off on quite a bright note, but you know the story, right, of the last few months odd. But nevertheless, I think from Diwali to Diwali, which is from last October to now, I think the equity mutual funds have seen a net inflow of about 1.5 lakh crore rupees. And this is just about the kind of outflow that debt mutual funds have seen. So almost at the same number. Liquid funds, though, are in the positive for this last 1 year period. So about 72,000 crores inflow in the liquid funds. Now, I'm sure everybody's wondering which have been the best performing mutual funds in the last 1 year. We do say that, past performance is not the way to judge a mutual fund. But nevertheless, the only way to see which are the best performers of the last 1 year is to judge by the 1 year return. So in that sense, we have Axis Mid-Cap Fund, the growth option, which has seen a return of about 4.5% UTI Equity Fund, ICICI Pru Focus Equity, SBI Focused Equity, as well as the Canara Robeco Blue Chip Equity Fund. So these are some of the funds which have given returns. And, Mangalam, you must be wondering that the last 1 year returns are just between 2 to 3 to 4 odd percent, where a lot of funds are actually, have seen their NAVs dip. So returns have been negative. And some of the best performing fund managers who have generated wealth over the last 1 year have been Ajay Tyagi. We have Shresh Devalkar, Sailesh Rajpan, as well as R. Srinivasan. So their details will just flash by for you. But these are the top 4 fund managers who've managed to generate the maximum wealth.
All right. So this is what you do. The best way of investment, you go ahead to and deploy your money in a systematic manner in mutual funds. And over the long term, you will be better off than now. But as far as right now is concerned, the markets, we are seeing a sharp amount of sell-off. Yes, the mid-cap index too has now declined by about 100 points at the low point of the day for all the frontline indices. PC Jewelers, the stock that we were talking about now on the ticker team as well, or the ticker team has flashed that down about 13%. Remember, ahead of Dhanteras, we saw a 70% rally in this stock, and now profit booking has come by, or some sort of volatility kicked in on PC Jewelers. Along with that, we have ICICI Pru too, seeing a bit of a buying right now. Apart from that, we are at the low point of the day for all the indices. With that, I believe we are out of time on the show. We will wrap up, but do stay tuned to CNBC TV 18. Closing bell comes up next. Asian markets, before we get on with trade, as far as our markets are concerned, it's mostly in the green after the Dow rose nearly 200 points.
The RBI is something like a seatbelt as a driver, the driver being the government. It has the possibility of not putting on its seatbelt. But of course, if you don't put on your seatbelt, you get into an accident. The accident can be quite severe.
Today is a day to try short trades. The risk reward does not favor fresh longs.
For this year, 10 to 12%. And definitely now 12% is feasible. And it may be slightly higher than this if I go by the trend in October.
0.25% higher on whichever index you want to pick, 26 higher on the Nifty.
Current valuation framework also doesn't make risk reward attractive, specifically given likely earnings cuts ahead for the markets.
Long-term prospects of India, I don't think have changed materially.
Turning out to be a session of calm and quiet for our markets as well. For the Nifty, 10,550.
Markets up 54, 55 odd points, 10,577.
Okay, the market's now trading at the low point of the day. Not entirely unexpected, actually. 10,509 is what you have on the Nifty, and on the Bank Nifty, we're now down about 130 points as we bring the build-up to the last hour for the weekly options expiry, which of course is this time happening on a Tuesday. This closing bell. I'm Anuj. With me again today is Ekta. Hi Ekta, good afternoon.
Hi Anuj, afternoon. Well, what a turn of events, right? The Nifty at 10,506. We have the Bank Nifty down 0.5%. Yes, you said it is Bank Nifty expiry today. And the mid-cap index has also reversed. But you saw this coming.
Yeah, look, I mean, the point here is when the market starts to react badly to, supposed good number like SBI in the morning, I think indications were there. Also, this is not the complete reversal, but the move played out. It all boils down to risk reward. The risk reward favored a long trade at 10,100. As we moved closer to the 200-day moving average, perhaps the risk reward did not favor a long trade. It's as simple as that. Ekta, let's see the crucial last hour for the Bank Nifty is still to come up. As we speak, we are below 25,600, which is where the highest open interest was. So is it going to be one of those eerie expiries? I think we'll find that out. But I think the way, look at that drag on the market, especially from SBI, about 77 points on the Nifty Bank. And that was not entirely unexpected. So that way, let's see what the last hour brings. Also, just on Friday in last hour, you saw a bit of a reversal in mid-caps, and today also you have seen that. So, perhaps it will, you should not overstay your welcome in a counter-trend move. What we've had is a bit of a counter-trend move. Let's see if that's coming to a bit of a fruition. Also, tomorrow is Muhurat trade, and then we don't trade for one day. The global markets have also shown signs that in the emerging market pack, there's some bit of weakness which is back in markets like Hang Seng and all, and we have performed in line with the emerging markets. So this move should not surprise too many, considering the kind of run-up that we have seen. Profit-taking move in line with the rest of the emerging market pack.
Okay, but the one stock which is actually disconcerting right now has to be what's happening with State Bank of India. That stock is down around 3.2%. I mean, yesterday we were talking about the numbers during closing bell, and the prima facie numbers look good, and there was no issue with the numbers in terms of the profit figure, the 10,800 crores or gross slippages. There's something the market doesn't like.
Yeah, I had an issue with the number itself in the morning also, with the net profit, the one-offs, and the market positioning. The market positioning, SBI had rallied from 240 all the way up to 300. This is not the SBI of 1 year back, which had gone into the numbers absolutely, smashed up. Just look at the chart. There's a massive rally which had already taken place. So sometimes SBI numbers do lead to some kind of culmination of a move in the sector, and perhaps that's what played out today.
Okay, well, yes, we have even something like an Axis Bank which has lost out. Remember that Axis rallied post numbers, but now that seems to be coming off. So Axis down around 3% and Cipla, that stock has now lost around 12.5% this week itself, majority of it coming between yesterday and today. But let's tell you what's lined up on the show today. Benchmark indices trade in a narrow range on the last day of summer 2074, with the Nifty Bank and the Nifty Mid-Cap Index trading with a cut of 0.5%. We discuss this and more with more fundamentals with Mr. SP Tulsian of sptulsian.com, who will be with us, market expert Anand Tandon and Sudeep Bandopadhyay of Indie Trade Capital. Which are the sectors to look at, and which ones are the ones that investors should be wary of? We ask Arun Kumar, market strategist at Reliance Securities, joining in as well today. And as always, our technical experts will take you through the key trading strategies for the last hour of trade.
Okay, how should you position yourself in this last hour of trade? Ashwini Gujral and Mitesh Thakkar now join us for closing strategies. Good afternoon. So, Ashwini, what's the strategy for last hour? You've been recommending buying the dips. Are you buying this dip for the last hour or for positional trade?
Well, that's how weak longs are kicked out. I mean, who died today? Day traders. And it is a good time for the positional trader who believes that there is upside to buy into this dip even 100 point lower. If you go to 10,400, 450, even that's not a problem, because you can give back 50%. So the big trade from here is if we are not going back to the lows and somewhere the market finds buying and this time takes out, this 600, 650. So in my opinion, this is now catastrophe. Down 25 points on Nifty, 100 odd on Bank Nifty. I would recommend buying for people who can hold with a 100-point stop on the Nifty, maybe 150 odd on the Bank Nifty, 25, 300 thereabouts, and they should hold on. I think there is more coming. In case there was only a 1 week rally in the offing, you wouldn't have found a double bottom at 10,000. That is a thesis I'm working with. I would think that this is a good time to buy into a lightened up market. So Nifty, Bank Nifty, both should be bought. TCS is a buy with a stop of 1900, target of 1955. RIL is a buy with a stop of 1090, target of 1130. And Bata is a buy with a stop of 1000, target of 1050.
Okay, let's get those Voltas numbers back on screen. The numbers look good actually. The net profit, revenue, EBITDA, all the numbers are above the estimates. Just pull out those numbers. And that's the stock, of course, on the lowest point, seeing quite a bit of rally. Can you just put those numbers once again on Voltas? That's the EBITDA of 108 crores versus CNBC TV 18 poll of 97 crores. That's a very good number. Margin is slightly lower because the sales have beaten estimates by quite a bit. So the base is quite high. But if you see the net profit number and if you see the revenue number, all these absolute numbers have beaten the estimates, Ekta.
Yes, absolutely. So 108.5 crores and the consolidated revenue. I think the biggest beat, Anuj, has come in on the consolidated revenue, which is, at 1,421 odd crores versus our estimate of 1,150 odd crores. So that's really where the beat has come in. And in fact, that would equal to around a growth of 37% at least. I don't know. Let's see the versus figure first in the P&L to make a decision in terms of what exactly the growth is. But it's definitely come in terms of the biggest beat on the revenue front. Might not have percolated down onto the margins because I think the margins are still around 8% So it's not percolated onto the margins.
And I think market positioning as well. We'll go to Mitesh as well, but if Mr. Tulsian is with us, Mr. Tulsian is with us from sptulsian.com. Mr. Tulsian, good afternoon. First thoughts on Voltas. We only have the net profit and the revenue number for now, but they both look better than the street estimates.
Revenue growth.
So, this electromechanical project segment has really performed quite well, and if you see the if I take the YOY, because that's a right comparison, the turnover has risen. This 400 crore increase in the turnover which we have been seeing has come from electromechanical projects of 900 crore against 558 crore in the same quarter previous year. And the EBIT has really risen. The EBIT has increased to 76 crore from these segments against 30 crore in the same quarter previous year. And in fact, this EMP division is seen to be, coming out now. In fact, for last maybe 4 quarters or maybe this may be the 5th quarter, which has been really showing very good numbers. Because if you recall, prior to that, they had the losses in their overseas contracts, which have all got executed and came to an end. And thereafter, they have been very cautious and, in fact, they have been very prudent. So this is seen to be the contributor, going forward in the off season when you don't see the unitary cooling products, or maybe the air conditioned division seen contributing, which is expected to be low. So the electromechanical EMP division has really performed quite well.
Yes, absolutely. So it is actually a revenue growth of 37% that Voltas has delivered this quarter. So very good numbers which have come in at least on the revenue front. And the management is also saying that they've improved their market share to 25.6% versus 23% in the room AC business. So that too is positive commentary which is coming in from Voltas. But Mitesh Thakkar is joining in to discuss a couple of his technical calls as well. Mitesh, over to you then. What are you recommending, index and stocks?
See, I think on the index, I think we are in for some consolidation. I've been calling for that as much since morning. 10,440, 10,450 should be a first support. In case we drop below that, maybe 50, 60 points could happen. But broadly, 10,650 and 10,440, 450 looks to be the zone. But the Bank Nifty, I think, is slightly more positive as long as it can stay above this 25,400, 450 level. So I still believe, despite the fact that the Bank Nifty has come off from the day's high, I still believe that, I think, we are trending on the upper side. And clearly, I think, maybe a day or two of consolidation and we'll see the uptrend resume. For the timing, I have one buy and one sell call. A sell on Sun TV. If it breaks 605, keep a stop at 616. Look for targets of 585. While ICICI Bank is a buy, keep a stop at 343. Look for targets of 375.
Fair enough. Let's address those Voltas numbers again. Now the stock is cooling off a bit because it had a big, rally immediately post the numbers. Perhaps some profit taking is what you're saying. Just a bit of the highest point of the day. Anisha, who tracks the company, is also here. Anisha, prima facie numbers look good, but anything in the internals that should worry investors?
Well, yes, the stock is cooling off because of the fact that the AC business of the company has not performed well. Yes, they have improved the market share by 200 basis points, and that is substantial, and that is the good news when it comes to the company's top line. But if you look at the internals, the AC segment revenue has not grown at all. The margins there has depleted and come to a level of around 6%. As Mr. Tulsian was also pointing out, it is the EMP segment of the business that has done better. The EBITDA has come in there at 75 crores versus just 30 crores last year. And look at the revenue as well, 900 crores versus 550 crores. So that delta of around 350 crores has actually come in from the MEP business of the company. And this is something that the analysts have not yet factored in, because MEP business has been very lumpy for the company. In the last 2-3 quarters, we have seen it has started showing some sustainability, and that's a positive. But if you look at the core AC segment, no fireworks there. In fact, I'm guessing the analysts in the street would not be very enthusiastic about the AC business of the company. Back to you guys.
Okay, so that's Anisha saying that perhaps the fact that AC business, that's not done too well, and that's the reason. In fact, now the stocks off to the low point of the day.
In fact, Anuj, I just want to point out, I just calculated the margins for the cooling business. Like Anisha mentioned, it's come down to 6.3%. This compares to 12.4% last year. So it's completely halved in terms of the margins that we're seeing for the unitary cooling segment.
Yeah.
And I think that's what's
also today the market's mood is very somber. There's the good news being sold into today, so that's also an issue. Perhaps from the investors' point of view, I would want to see how analysts react, and of course tomorrow we'll have post Muhurat will have a measured reaction. But for now, suffice to say that it's cooled off from the highest point that we had seen. Anand Tandon is also with us. Anand, hi, good afternoon. I wanted your thoughts first on State Bank of India, and how should you approach that stock now?
Well, I think it is work in progress. Things are improving, but not necessarily something that you have to jump in at today. That said, I think if you look at it on a one-year view, I think you will find that it should be higher than where we are at the next Diwali. So if we are looking to be bullish, SBI is certainly one of the stocks I would recommend.
Okay, Anand, hi, afternoon. Voltas is the one that we've been discussing post numbers. What are your thoughts on it?
Too early for me to comment. I don't have the results in front of me, but really speaking, I think if you are looking at industrials, and I think there is a case to be made for looking at that, especially after L&T's results. You are probably better off looking at pure play infrastructure, because that is where you are likely to see a bigger upstick. And there does seem to be some decent numbers coming through both in large cap and small cap in that area. So why not just look at Larsen rather than any other sector?
Fair enough. Mr. Chen, any incremental thoughts on Voltas as we speak now? In fact, the stock is sliding down about 3.5%.
See, Anuj, actually problem with Voltas is that we are seeing the bad quarters, coming in for the air conditioners. You don't have any kind of accretion or any kind of comfort seen coming in for the December quarter. In fact, we get to see those things starts happening for the March quarter and June quarter. In fact, March quarter starts showing some kind of, and the June quarter is seen to be the best. So probably, and we have seen the EBIT, of the unitary, as I said, unitary cooling division exactly half of the EBIT, on the EBIT front, with a turnover of 400 and 450 crore, with EBIT 50 crore to 25 crore, which has been largely compensated by the EMP division. In fact, EMP division is seen to be the real this one, because in engineering product division, they are maintaining their 40% EBIT. That's a constant. They are not showing any kind of growth, any kind of margin compression on that. So now the third quarter, probably market feels that there is no hurry to buy Voltas, because third quarter is going to be again the dull there, because Voltas is known more as an AC company, and if you don't have their core business contributing anything, why anybody will go for that? But EMP division is really showing a good improvement, and I think that will seem to be the contributor, because if you really take a call, as I said, that if you take the continuous improvement, I think for FY18 they had closer to about, or maybe sub 200 crore as the EBIT, from EMP division, and this year this is going to be closer to about 300 crore. So maybe things are seen improving on the EMP front, but because third quarter is seen to be quite dull for their main core business of air condition, probably market is disappointed with the fall in the margin, which has exactly halved in case of the air conditioner division.
Okay, well, yes, definitely cooling off Voltas. So that stock is now at the low point of the day, down 3.5%. But Mr. Tulsian, the other one which is disappointed is Balkrishna Industries. Volume guidance cut for FY19. Margins have gone down by over 200 basis points. What are your thoughts on that stock?
See, actually, in case of Balkrishna Industries, if I just focus only on the raw material cost, honestly, Ekta, I have not seen the compression in the raw material cost, in spite of the crude being the seen ruling quite high. In fact, they have managed the raw material cost quite well. In fact, the raw material cost is seen at 46.2% for Q2, which was at 46.9% for the QOQ basis and 49.2% on YOY basis. So, in fact, I would say that the market, the way the market is responding, maybe yes, I can understand for the guidance contraction, where the volumes have been contracted. But if you really focus on Q2 numbers, I honestly don't see any disappointment on any of this. Yes, the other expenses I've seen have been increased, and that has taken a toll maybe by about 10 to 15 crore. But I think that the contraction or maybe the share price having corrected by about 11-12% is really giving a very good, excellent buying opportunity, because probably management may be sounding little cautious. Because if you really see their product, OTR tires, and 90% of that comes from the exports, or maybe 95%, and that will be seen quite positive for them. Even if the volume contracts, the margins will be seen rising, or maybe seen keeping on a slightly better footing because of the crude softness also. So overall, we are extremely positive, and in fact, we feel that 11-12% share price seeing correction should be used as a buying opportunity with maybe view of about 6 to 8 months or so.
All right. Well, we'll take a break on that note. The news that once again the Bank Nifty is slipping as we start that countdown to the weekly options expiry. Looks like 25,600 is very crucial, because it's trying to defend that mark once again. Just some kind of support at 25,600. So we just want to keep an eye on perhaps HDFC Bank. But clearly today's trade selling the rally has worked out more than buying the dips.
Well, for the Nifty, in fact, there's a bit of a recovery which has taken place. So it's flattened out, and the mid-cap index still weak, down around 100 odd points. But the Bank Nifty, ahead of its Bank Nifty options expiry today, there is some amount of volatility which is still taking place there. So stocks such as IndusInd Bank also quite sluggish. State Bank of India has recovered, however, from the day's low, still down around 2.6%. Anuj, do you think that we're making a dash for the green just based on what we're looking at?
I think the Nifty has support, Ekta, from a couple of stocks. There's been Reliance, which has done well, though off the highest point. I think TCS, like we made the point in the morning as well, IT is making some kind of comeback. That is visible over the last 2 days, that there's some money perhaps moving from banks to IT. I think that trade is playing out, because you have seen quite a bit of reversal of that trade earlier. So L&T has done well. So that way, I think the Nifty is fine. And once again, this move should be looked at in the context. Because we've had a rally, and that too a big rally from 10,000 to 10,600. Last week was 5% on the Nifty. And after 5% move on the Nifty, it's bound to happen that you will see some kind of congestion, some kind of profit taking, perhaps some kind of reaction. In fact, it would be healthy for the market if it has to first perhaps correct a bit, back down to 10,400, then perhaps make a higher base and rally. So should not perturb. Look, the key theme is that perhaps the markets made some kind of double bottom at 10,000, but it's going to, at higher level, obviously there's going to be some kind of jitter which would come back, and that should not unnerve you.
But, 10,000, is that become a base now?
Yeah, that has. I think unless there's some kind of catastrophe that, we cannot figure out, Ekta, you'll have to believe, and in equity market, you have to take some risk. So you have to believe that, for now, 10,000 is some kind of base for the market.
Okay, well, let's get in another technical call. We have Sandeep Wagle, who's joining in to discuss the technicals of the market at this hour. Sandeep, hi, over to you. Happy Diwali. You're wearing the right shade, I must say, for what's happening with the Nifty, mid-cap index, Bank Nifty. So what would you recommend? Stocks index.
Afternoon, Ekta. I think the Nifty is in a 50-70 point band. I don't see weakness per se, but I don't see it running away as well. We will see profit booking at higher levels. Stock specific, I would go with a sell in a PC Jewelers, stop loss of 90, target of 72, and a buy in a Jet Airways, stop loss of 259, target 275.
All right, Sandeep, thanks a lot for those trading ideas, and happy Diwali to you and your family, of course. We'll talk to you now in next Samvat. Mr. Hussain, before we thank you for the day, I just wanted your thoughts on this rally which has started in Jet Airways. Yesterday, of course, Kritika reported this news that perhaps the second round of talks between Tata's and Jet, and today also that stock is up about 4.5% in a slightly weak market.
So Anuj, you have all the reasons to believe this story, because on one hand you see the Tatas are seen desperate in having an airlines. They have not been able to do that with AirAsia and Vistara. On the other hand, Jet Airways promoter Naresh Goyal is not able to run the show with 51% holding. And even if you see the Etihad, maybe because of their global, turmoil at their end, even they are seen to be desperate to exit. Now, if you take the situation or the news flows or the expectations, or the rumors, whatever we may call it, the Tatas are looking to buy entire stake, that is 51% of Naresh Goyal and 24% of Etihad. So they will be having 75% stake, and in that event, any foreign carrier is only allowed to have 49% stake in the Indian aviation stock. So that makes a perfect fit. Even if I presume that 75% will be acquired by this deal, open offer, they may be able to mop up 5, 7, 10%, and then the new global partner can come, and there will be many people, many foreign airlines who will be keen to join as a joint partner with Tata. So yes, you have all the positive news flows to believe that this can happen. And I don't think that there will be any other suitor for Jet Airways also, because people have been talking one or two other names also, which there is no point in speculating. So yes, if that happens, I think that will vastly re-rate the stocks, because if you take the valuation of the Jet Airways, this is seen to be quite low as compared to any other airline. So yes, the things will be seen quite positive, and those who have been holding it are advised to hold. I won't advise the fresh buying in the stock at the current level. Already it has risen by about 30% from its low, but yes, the story has a substance.
Okay, the story has a substance. Mr. Hussain, thanks a lot for joining us today, and once again, happy Diwali to you and your family. Of course, we'll talk to you tomorrow and in Muhurat trade, but for now, thanks a lot for joining us.
Okay, well, we still have Anand Tandon with us. Anand, wanted your thoughts on Tata Motors. That stock has recovered close to 200 rupees. It's still 195. But it's rallied from those levels of around, say, 160 or 170 or that it had hit. Do you like the stock, and would you be a buyer? Which camp are you in?
I think there are less contentious issues to look at. If you are looking at autos, I think two-wheelers perhaps offer a safer bet, or perhaps even SUVs and tractors in the form of Mahindras. I think that at this stage it is better not to be adventurous and look for a turnaround till a turnaround is actually in the face. You may be buying more expensive, but at least you are sure that there is actually something behind you. So for now, I think not necessarily the best area as far as I'm concerned.
All right, Anand, thanks a lot for joining us, and have a happy Diwali to you and your family, of course. On that note, Arun Kumar, market strategist at Reliance Securities, is now with us on the show. Arun, hi, good afternoon. So much has happened in the market. First of all, happy Diwali to you. You reckon this somewhat could bring some cheer back to the market?
Hi, Anuj. Happy Diwali to you, to your team, and all the viewers. Yes, we are seeing a counter trend rally. What has happened is the way market has been set up over the last 2 months, it's quite negative. So if you look at the monthly charts, the Nifty is on sell mode, and we expect this pressure to remain. However, having said that, on the near-term basis, on the daily charts, we are looking at a buy. So buy signal. So we are essentially looking at a counter trend rally, which is taking place somewhere till about 10,700 to 10,800 is what we are looking at.
Okay, Arun, hi, afternoon. So considering that you're expecting the Nifty to probably go to 10,700, 10,800, what is the range that you would envisage then for the near term?
Near term, probably for this expiry, we are looking at a top of 10,700 to 800, and downside, I think somewhere around 10,300 can act as a decent support for this expiry. But going ahead, if we are looking slightly medium term probably, and seasonality, taking into account the seasonality also, probably till about December, the markets may just consolidate. And somewhere in December or beginning of January, we may see the resumption of a bigger correction.
Okay, that's interesting. So let's drill it down to stocks. Before that, just a word on this sectoral move. We had in the month of October this IT versus bank actually reversed, especially in the second half. IT fell and banks started to rally. But over the last couple of days, again some indication that perhaps IT is beginning to outperform. Your thoughts on the two major indices?
See, as far as Bank Nifty is concerned, if you look at the monthly charts, Anuj, it is not looking good. Okay, so the kind of steep fall what we have seen, there has to be some corrective rally, and which is what is taking place. And we are very close to the resistance levels of 26,000, and probably give or take another 100 to 200 points, we are bound to face fairly decent resistance over here. And probably like taking the seasonality into account, we may see little bit of action or probably a little bit of muted action till about December. The setups are very similar. So going ahead, we are not very bullish on this sector either. And as far as IT is concerned, the setup on the charts, monthly charts are quite bad. It's heavily overbought on the monthly time frame, and we are looking at corrective action.
Okay, which are the stocks that you're looking at corrective action in the IT space?
In IT, we are looking at Infosys this week. It's roughly it could slide all the way to 550 or 590 over a period on medium term basis. Let us say approximately about 4 to 6 months time. Again, TCS is looking weak. It's roughly around trading around 1,930. Probably you are looking around 1,650 to 1,700 zone. Techem again is one more stock where the setups are relatively stretched, and probably it can react more.
Okay. ICICI Bank is the one which has been the leader of late. Arun, your thoughts on what kind of levels that you should now start to expect on this one?
See, as far as ICICI Bank is concerned, the setup is quite good. There had been plenty of pessimism around the stock, and the kind of move which has the way it has moved, we expect this stock to move towards 400 to 430 on a medium term basis. This is likely to outperform the market.
Any other banks that you are say negative or positive on?
Among the bigger names, we are slightly negative on HDFC Bank. HDFC Bank, though it has fallen, it is consolidating currently. We expect this consolidation range to break down over a period of next 1 or 2 months, and probably head towards 1,575 to 1,700 zone. Apart from HDFC Bank, IndusInd Bank is also looking weak. It can probably touch sub 1,000 levels. And HDFC Limited is also quite weak. So we are expecting a fall around a 300-400 rupee fall.
So let me get this straight before we thank you. On the index, do you expect this 10,000 mark to be broken again on the downside? If yes, around what time?
See, from the way the market is moving, there is a high probability that 10,000 can be broken in the month of Jan or max by Feb. Okay, and roughly on breaking, we are looking at an initial support of 9,500 and subsequently around 9,000, give or take 100 points. I think close to 9,000 it can reach.
All right, Arun, we leave it there.
We are looking at a time frame around June.
Sure, fair enough. Thanks a lot for your time today. It was good talking to you. Once again, have a good Diwali and, of course, a very happy New Year. So 3 p.m. Looks like the market wants to defend the 25,600 on the Nifty Bank. 25,612 is what we have. So as of now, no major move. So for now, I'll have to say that the markets negotiated that bit of volatile phase and has stabilized above 10,100 and on the Nifty Bank at 25,600. Mid caps, of course, have seen a bit of a profit taking today, but there are a couple of stocks making the highs of the day. Glenmark, for example, just see the intraday chart on Glenmark. That stock making highs of the day right now, so that's interesting. And DCB Bank among the mid cap banks right now moving to the high point, so that one also should come up for you. 4.5% higher. Look at that sharp spike in DCB Bank right towards the end as that 3 p.m. move played out. Ashwani and Mitesh with us for BTST calls. Ashwani, you go first. Thoughts on index and individual stock calls?
The market is doing basically a range of 10,500 to about 10,600, give or take 10 points. And similarly on the Bank Nifty, the range is about 25,600 to about 25,900. So that way, that range, the downside has been defended. So my sense is that a couple more days in the sideways zone and then we move on from there. So that should take care of all the choppiness and possibly the global markets will give us a direction post that. Having said that, I think one of the stocks is Glenmark, where you have a stop of about 650 and you are looking at targets of about 685. Again, DCB Bank is looking very good and it's making highs of the day. That's a buy with a stop of 160, target of 174. And Yes Bank is also showing strength going into the close. That's a buy with a stop of 210, target of 221.
Okay, Mitesh, what about you? What would your BTST calls be?
Yeah, I have a buy on PFC or Power Finance Corporation. Keep a stop, or BTST, keep a stop below 96. Look for targets of 101.5. And Tata Global is my choice on the selling side. That's kind of breaking down. So sell with a stop at about 218.5 and look for targets of 210. It's kind of dropped a bit, so maybe on a 1 rupee bounce back, I think STBT trade can be taken.
Okay, Tata Global is interesting. In fact, is making the lows of the day now. Just pull out that intraday chart on Tata Global. So that's looking quite interesting. The other one which is making a bit of a move is Nestle. Just see the intraday chart on Nestle. In fact, it looks like a bit of a FMCG move right now. Nestle has moved to the low point. Bosch is the other one where you've seen a bit of a decline. So that one's seeing lower levels. By the way, don't lose sight of the Nifty Bank. Once again, we are slipping below 25,600. And this time the move is courtesy HDFC Bank. This, is quite interesting because, HDFC Bank has now started to make a bit of a lower move. Mitesh, any tech chart, tech check on HDFC Bank?
See, HDFC Bank in the last few days has remained weak. It did bounce back from levels of around 1900, but I think getting past this 1980-2000 zone would be very difficult for the stock, and I think it might just keep making lower lows, though not significantly lower lows. So I think it might go back to 1900. If it breaks that, maybe 1850, 1860 could happen over here, but that should be it.
Okay, 25,575 on the Nifty Bank. Just keep an eye on that because it looked like at 6 p.m. perhaps it was taking support there. It's all weekly options. This time we have 3-day series or 3-day expiry. I mean, would you believe it? Of course, because Thursday is market holiday and tomorrow we have Muhurat. But the lowest 25,558 and right now we are at 25,576. So just keep an eye on that.
Okay, but let's get in some market opinion now. Earlier today, we spoke with Gautam Chachoria, MD and Head of India Research at UBS Securities. Listen in to what he had to say on the growth outlook for Indian markets and his view on banking and NBFCs.
The hope is always there for Indian markets because the long-term story is very much intact for Indian macro as well as stock markets. But yes, our view is for now still not positive from a near-term perspective. The risk-reward is still unattractive. And the reason for that is very simple. We have seen the markets derate over the last few months. But the important change also is we have moved away from the easy money era of last 3-4 years in India locally to a tighter liquidity environment. And in that sense, we will see very difficult for markets to re-rate back up from current levels. So keeping the current valuation framework also doesn't make risk reward attractive, specifically given likely earnings cuts ahead for the markets.
The result season is almost behind us. Most of the big numbers are there. Now, what's the assessment of earnings growth this year?
The first half results were expected to be optically good given the base effect from last year. But what we also do is look at the 2-year compounded growth rate for the first half and for the second quarter. And the compounded growth rate numbers doesn't look that exciting. It looks good for global commodities, oil, metals, etc. But the full local economy facing companies, while the 1-year Y&Y numbers look optically good, but the 2-year compounded growth rates is more of a steady cycle rather than a big new upcycle per se. And this base effect will wear off for the second half this year. And also you remember that whatever liquidity tightness we have seen over the last couple of months, and in fact for the last 6 months, will have some follow-through impact on growth in earnings for second half. So our top-down view is still 13% growth in earnings for Nifty for fiscal year March 19, which implies another 7%, 8% cut to street estimates. And 13% is not a pessimistic or conservative number. I'm building in some kind of optimism there. So we'll still see earnings cuts for fiscal year March 19, specifically into second half.
Is the biggest risk, as you suggested, the earnings growth slowdown because of the liquidity squeeze, or are there any other risks on the horizon?
As we enter into 2019 election season, that uncertainty will become an overhang for market multiples, or will possibly cap markets to re-rate further, unless markets get confidence that this government is going to come back with a high level of confidence. Secondly, retail flows. We have seen the non-SIP part of retail flows dry up this year. And even SIPs, the second derivative has turned, in the sense that SIPs have stopped growing this year. They were growing every month for last 4 years. This year they have stopped growing. So if markets don't move up from here on, or correct 3-4% more from here, then even retail flows could be vulnerable and could be the one last support for the market could also be missing.
Thoughts on pharma? A couple of stocks like Divi's Labs, which have got their mojo back after that, horrendous last year. You reckon some more could follow that?
Overall, as a sector, we are still neutral from a portfolio positioning perspective. Pharma sector is much more about individual stocks than the broader sector. But yes, the big picture sectoral themes, the worst may be behind in terms of US generic pricing pressure. There is still pricing pressure, but nowhere as sharp as last 2-3 years. Even the FDA inspection, the worst is behind us. But what is still missing in general for the sector, except specific companies, is the outlook turning positive for US generics. Select companies with specific models can do well, but a broader sector is still a neutral call for us.
There seems to be a shift in focus towards the corporate banks because of the improvement in asset quality. Would you not want to sort of jump onto that bandwagon?
Absolutely. We have been overweight retail liability-driven corporate banks also. In fact, that's the most overweight call for us, and it's fairly consensus right now. Retail liability-driven corporate banks. So not wholesale-funded corporate banks, but those with retail liability. Last 6 months and for the foreseeable future, it will be a tight liquid environment. So banks with the retail liability franchise will do well, both retail lenders as well as corporate lenders.
Are you all fishing in the troubled NBFC or HFC waters?
Top down, no. We're still underweight non-bank financials and wholesale funded banks. The reason being that this liquidity tightening which we are seeing, beyond the short-term noise around credit crunch or a couple of defaults here and there, which I don't think will be a prolonged credit crunch any which way given the size of the problem. So I'm not worried about that. But what will not change is the tight liquidity. Unless oil crashes below $60 sustainably, liquidity is going to remain tight for India. And in that context, the NBFCs and wholesale funded banks still have more room for downside than upside at these valuations.
Well, cooled off for a couple of stocks. So something like a Tata Motors. TCS is now actually the top gainer on the Nifty. So that stock is up around 2.2%. And Yes Bank doing well. So that stock is also up around 2%. Sudeep Bandyopadhyay of IndiTrade Capital joins in to discuss the markets now. Sudeep, hi, afternoon. Happy Diwali to you. What are you recommending in terms of, say, levels for the Nifty now? Where do we go from here?
Good afternoon, Ekta. Wish you a very happy Diwali. Happy Diwali to the entire CNBC team and our viewers as well. I think, the way the market is poised and with the way the oil has behaved in the last few days, we are, feeling that markets are cautiously optimistic now. And I think if that optimistic mood persists, It is possible that the Nifty can claw back to 10,800 levels in the near future. I'm not sure whether it will happen, in this truncated week or it will, happen next week. But it is extremely likely that markets will gradually inch up. Of course, there are a couple of other major news which will come to the market, particularly the US election results, and that will definitely have a sentimental impact on the global markets, and it will percolate down to India. We'll get it, probably see it getting played out over the next couple of days. But a positive mood, positive momentum is what we are witnessing for the last couple of days. We have to be still cautious. I think we are still not out of the problems for the global market and domestic market, but it has turned a bit positive over the last few days, and that's what we maintain.
Okay, by the way, the Jet Airways has sent official clarification to the BSE. That should flash on the screen, about that story that Tatas are in discussion with Jet Airways. The company is saying that it's speculative in nature, and as of now, there's no discussion or decision in the board which would require any disclosure. So that's the official word coming in from Jet Airways right now. That statement from Jet should flash on the screen. Of course, this is regarding the story that we had yesterday about Tata Group in conversation with Jet. So for now, the company is saying that as of now, there's nothing which would require any kind of disclosure. So basically, this is neither denial nor acceptance. This is what companies normally do. But that's the statement from Jet. Sudeep, hi, good afternoon. Happy Diwali to you and, of course, your family. So what's going to be the portfolio stance for you from here on in terms of big stocks?
Happy Diwali, Anuj. I think, I have been maintaining over the last few months since the market started correcting that excellent opportunity is emerging for long-term investors or for investors who pick up stocks based on fundamental analysis to pick up interesting stocks at significantly lower value compared to what it was. I'm not talking about, a top-down approach. I'm talking about very, very selective stock picking and good quality stocks. We have been talking about Ashok Leyland. I think it's a fantastic company. Things are going right for the company, both in terms of domestic market as well as export orders, Basel VI norms, as well as the vehicle scrappage policy, which is imminent, should help. So I think that's definitely one stock we want investors to pick up. We also want investors to definitely look at Titan. Of course, it has corrected once again today because I think Dhanteras sales was not as what it was expected. But Titan, for an investor's point of view, should be in his portfolio. And post these corrections, and even today's correction post the price, the way it went up, I think it's an excellent stock to hold in the portfolio. The third stock which I will mention for an investor will be Maruti Suzuki. Again, an excellent company. I don't have to talk about the company. Fundamentals are fantastic. It has corrected significantly, but again, at current level, it can be looked at. Last, I will talk about the corporate banks. Significant correction over the last 1.5 years we had seen. They have been really beaten down and were available at between 1 and 2 times book. Even today, I think ICICI at FY20 level, it is still below 2 book. And I think now we have seen the worst as far as ICICI, Axis, and also most probably State Bank of India. So for a little aggressive investor, these 3 banks, I think, are showing positive entry points at current levels.
Okay, well, Sudeep, just hold that thought. Let's get in some market opinion now. We've seen a big correction in the market, but some market veterans feel that stocks are still not as cheap as 2016. So here's more on the market approach from Akash Prakash, Rhythm Desai and Ramdev Agarwal, as always, in our Diwali special.
I think, my view is a little bit more, cautious than most people in the sense that I think the market was ahead of itself last year. The valuations in the mid-cap and small-cap space specifically were, in my view, quite extended. So I think this correction, which we are either undergoing or has completed, is much needed for, and it's brought valuations back down to a more reasonable level. So, but I still feel that, and I've been saying this for some time, that the scope for PE expansion in India is over, and you now need to see earnings growth. Until we get a decisive visibility and demonstration of earnings growth in India, I don't see how the market goes up significantly. So if we get the earnings growth, I think the market will do very well. If we don't get the earnings growth, then the market will just hang around here. So I think the market will wait to see that. That's my personal view.
Yeah, I take the earnings growth bit. You said more reasonable. Reasonable enough for you to buy?
Well, specific stocks, yes, because I think there has been some significant damage in the mid-cap and small-cap space specifically. Stocks are down 30–40%. So there are the specific ones which look interesting. Broad market as a whole, I don't think the broad market is cheap in that sense. I think it's a very stock-specific market. This is not 2013 where the broad market was cheap and you could have bought pretty much anything. I don't think this is anywhere near that level of being cheap.
Okay. Rhythm, change of look, got the moustache back. Is it for good luck for the market?
No, I've had the moustache for a while, Anuj.
I like the fluorescent green for the market.
Yeah, fluorescent green. But just on Akash's point, in fact, it's not even as cheap as Feb 16. Forget 13. 13, the market became very cheap.
Yeah.
But broad market is not...
6,900 in February.
In terms of valuations, very simple metric, market cap to GDP. Is still not back to Feb 16 levels. So what we saw was a ferocious 2017. And that's why we felt like 2018 was so bad. But we have not seen that type of price damage that we saw in Feb 16.
So the market is about extremes, right? We had one extreme perhaps at that point, the other extreme somewhere around February, March of this year. Has it corrected enough now for you to constructively look at the market in terms of building portfolios?
I feel so, because I think that the earnings cycle is turning, and I hope these are not last famous words, because we've been expecting this for 2 years now, and it's been belying us for that long. It's been very complicated actually, and has defied my expectation. But the fact is that if you look out 3 years, profit share in GDP is at all-time lows. A mean reversion is due any time. It hasn't come thus far. I don't think I want to give up on that call. I think it will come. And when it comes, I think, when we look back, stock markets may not have been that expensive. While they do look rich on a, say, PE multiple, the fact is earnings are very depressed. So I tend to look at price to book on the index level. I think that's a better guide to time the market. And it's currently at 2.8 times book, which compares with a historical average of 3.2. Which compares with the troughs of 2.2 in 97, 2003, 2008, 9, and it didn't come to 2.2 in 2013, but came quite close. So we are not in that type of a crisis situation. These were really big crises for us to go back to 2.2, but that is a line in the sand there, and I don't think it falls much below that. 2.8 is not a bad level for me to engage in stocks. With clarity that there are some risks out there which can cause valuations to come off, but they're not anymore at levels which frighten me. Last quarter, last year, mid-cap valuations were just out of the park and were just not justifiable. Now they look okay.
Oh, yes.
Just to extend that argument, and Ramdev, I just want to your view on this. In the month of September, perhaps we went through capitulation. The big stocks also started to fall. In the first 2 weeks of October, we saw a bit of a despair. Even the market refused to rally even on good news, and it was selling off even on good news. The last couple of weeks, the way the market has reacted to bad news in certain cases, has that given you confidence that perhaps it's now willing to look forward and the worst of the damage might be well and truly behind us?
So clearly after 1500–1700 points correction, a lot of this froth which was there, more in mid cap and small cap and even in larger caps, 20–25%, 30% individual stocks have been chopped off from their all-time high positions. So clearly that to that extent some amount of correction has definitely happened. Good amount of correction has happened. Is the correction, this end of correction? So one other factor, what Akash and Rhythm both they said perfectly, expecting the earnings growth to happen, which has been quite elusive for last 4 years. But one of the factors which has happened in last 1 year or last 3 years, post 2014, is the massive domestic inflow. And whether it is because of financialization, whether because of nobody is going into this real estate or gold. So everybody, they put the money in the bank, and the bank money, mutual fund acha hai. So there was a lot of impact of that, and we had 2.5 lakh crores flow, which is unprecedented. It is almost like 1.5% of GDP came into mutual fund only. And then what they did directly and what they did in PMS and various other things, that could be another 1.5% kind of thing. So we are talking about some serious amount of money which came into the market.
Well, for the Nifty, just about holding 10,528. So we'll probably just about end flat in today's trade, with the mid-cap index underperforming and the bank Nifty underperforming as well. Somewhat to somewhat, the Sensex is up around 8-odd%. Nifty is up around 4-odd%. But there have been a lot of stocks which have seen quite a difficult past 1 year. So you can see that on your screen, the likes of Grasim, Hero Motocorp, and many others. But Sudeep, if you had to pick one stock from here on in the next 1 year, which one would it be? I know you spoke about a lot of them, but if you had to narrow it down to one.
Well, I think, if I have to really pick a large cap in that sense of the term, probably I'll go for Reliance Industries. I think it's a great story in the making. It's significantly rewarded the shareholders during the current Samvat. But even from here on, I think it's got a long way to go. Look, I think, we have seen the petchem performing, we have seen the refining performing. Forget the last quarter, a little bit of softer GRM, but overall they have been performing very well. Finally, what we have started to see is the aggressive growth in the new businesses, which is the Geo and the retail. We strongly believe that this momentum will continue in the next Samvat as well.
All right, point taken, Sudeep. Thanks a lot for joining us, and of course, we wish you a happy Diwali and of course, a prosperous New Year. Let's take final thoughts from Ashwini and Mitesh as well. Ashwini, what's your verdict for the day then?
We're going through a consolidation. I think a lot of short-term weak hands are likely to be out of the market both today and if we get any sort of gap down. But it still does not look like the upside is over. And in case we have favorable news from the US, I think all markets are ready for more upside. So just the positioning tells you that there is more upside. Whether it happens from here or 50 points lower on the Nifty, that time will tell, but time to buy.
Okay, time to buy. Ashwini, thanks a lot. Happy Diwali to you as well. Of course, we'll talk to you tomorrow on Samvat and Muhurat trade. Mitesh, final thoughts from your end as well. Of course, we'll talk to you as well on Samvat, but today's move, has it given you any kind of confidence that the uptrend is intact?
No, I think the uptrend is still intact. There is no fear. I think the intraday charts are still showing positive traction on indicators and averages. But what has happened is that we've had 600 points kind of rally. So I think some kind of sideways action will be warranted. In fact, today morning also I suggested that getting past 10,580, 640 zone won't be easy. So that being the upper part of the range, 10,450 or 10,455, I think that's the first support point. So it could be roughly about 180, 200 point kind of range, and we might still spend another 3-4 sessions here.
Okay, all right, Mitesh, we're going to let you go on that note. Thanks very much for joining in, and wish you a happy Diwali as well. But Anuj, overall turned out to be a flat close for the markets. Recovered, but still, I mean, mid-cap bank Nifty underperformed. Yeah, much ado about nothing, right, today. But see, the point is, I think SBI's reaction today was interesting because that's the one which led the bank Nifty lower, Ekta. Otherwise, it's okay. The mid-cap index was down, but advanced decline was still quite okay. In terms of stocks, of course, today IT did well. So TCS was up about 2%. Reliance was up about 1%. ICICI Bank clearly has been the outperforming bank. That did well. Yes Bank as well was higher. Z Entertainment was higher as well. On the way down, SBI down about 3%. Cipla second day running down 6%. De-rating, and how over the last couple of days. I think over the 2 days, there's 13% move in Cipla. Axis was down, Titan was down as well, and Maruti was lower as well. Mixed bag in the large caps, as was the case with mid caps as well. Yes, absolutely. Well, there were a couple of financials which really got down and out. So DHFL, for example, was up 3.5%. Punjab Housing Finance was up around 3%, and by down and out I meant up in today's trade. So those were a couple of stocks which stood out. on the upside. And Exide stood out. Remember, it came out with numbers yesterday, so that stock was up around 1.5%. We had Torrent Pharma, which rallied, so that stock was up around 4%. So they ended at the high point of the day for that one. A couple of these stocks, such as Infibeam, saw quite a lot of interest today, so that stock was up around 8.5%, giving you a sense in terms of the type of stocks which actually rallied. Voltas was in focus post its numbers, so that stock was quite volatile post numbers. And separately, on the downside, there was also something like Pidilite, which was down 3.5%, Cadila Health, which was down around 2.8%, Equitas lost out a little bit, Tata Global Beverages was down 2.7%. Again, a couple of these NBFCs had a mixed day, so Edelweiss Financial, Ujjivan, both those stocks were down anywhere between 1.5% to 2%. Emami and Marico, both from the FMCG space, also were quite weak, so both those stocks ended down around 2%. So overall, it was a day where the Nifty ended absolutely flat. Mid-cap index was down 0.5%. Advanced decline ratio absolutely even keel, and the Bank Nifty on Bank Nifty expiry was down 0.5%. Okay, but that's an update on the markets. We're going to start a new somewhat next year. But moving on to an exclusive, there are concerns about Capita World's 59-minute loan platform as questions have been raised on the company's ownership, board members, fees charged. Sapna joins in with more details on this. Sapna, go ahead.
Hi, so this is a kind of government clarification that is coming in on the queries that you rightly pointed out. We have been given to understand very clearly is that, this is almost owned by public sector institutions, and also the choice of Capita World as a service provider for the 59-minute loan that was done through a bidding process. In terms of ownership, well, it is primarily State Bank of India, Bank of Baroda, and SIDBI. Who are the primary owners of Capita World. If you add the other banks, well, that comes to somewhere around 56%. So that's the second point that is coming from government sources. Third, of course, in terms of, Vinod Moda. Well, what we are given to understand is that he is not a board member of Capita World. He is a minority shareholder. And going forward, what we have been given to understand is that once the level of transactions reaches a certain stage, it's quite possible that state-owned banks' ownership of Capita World will go up to around 76%. We are also given to understand that under those circumstances, probably Mr. Moda may not, continue to remain a minority shareholder. But that's something that we wait and watch and see. But that's a fact that 76% is a plan to raise the state-owned bank membership in Capita World. Last but not the least, in terms of queries raised on fees, the first thing that we're given to understand is that this fee of 1180 rupees is charged only once the application is successful. The candidate applying for it is successful. And a large part of that is taken care, given to service providers who are providing services on this particular website, and that will include CIBIL. A tentative breakup that we were given was around, out of this 1180, around almost 800 rupees goes into giving this money to the various service providers. So what you actually end up is around barely 300 rupees as your own margin. Also, in terms of the key question that was also raised was in terms of storage of private data. For example, whatever your GST turnover is, or whatever you're stating your ITR or your bank statement, will all of that be stored on the website? The answer is a clear-cut no. No third-party data is stored on this particular website. We are also able to understand that probably SIDBI would be, coming out with some kind of statement. We just have to wait and watch for that.
Okay, all right, Sapna. Thanks very much for bringing us those exclusive details.
Well, on to a mega CNBC TV18 exclusive then. Earlier, Lata Venkatesh spoke with Raghuram Rajan. Here is more from that conversation on the Basel III norms.
I think the Reserve Bank takes a view based on how it sees the Indian economy. If the Reserve Bank follows blindly Western practices, the Reserve Bank gets accused of being in the thrall of the West. There are people who've made those accusations. If, on the other hand, we tailor to Indian conditions, we are asked, well, why don't you tailor to Western conditions? I think you can't pick and choose which regulation you like and which regulation you don't. There are many places where the Reserve Bank is actually more lenient than Western regulations. I think we repeatedly had Indian banks getting into trouble, for example, in Singapore, because Singapore said they weren't meeting Singapore standards, while in fact they met Indian standards. And we had a lot of back and forth about this. We are not necessarily the strictest regulator. I think that's a problem, that we are not actually as effective as we should be, and we're making progress in this path. But I don't think there's much to be gained by pointing to one regulation and saying this is looser or that is looser. Again, make the case to the RBI. The RBI will decide. But ultimately, the responsibility for financial stability lies with the RBI. Once you've appointed these deputy governors and governor, you have to listen to them because that's what you appointed them for. They're your safety belt.
Okay, well, there's a third point of contention, which is perhaps even more, irritable for both sides, and that is the government wants Reserve Bank to part with its capital. It believes that it is overcapitalized, and there have been several studies on this even during your time. Do you think that that's a legitimate contention? Should the Reserve Bank give in part of the way, part of the capital? What's the way to find meeting ground? Because there doesn't seem to be any.
Yeah. Look, this is a contentious issue and sometimes a poorly understood issue. So let me try and explain a little bit. One, the Reserve Bank's equity is a wholly owned asset of the government of India. It doesn't belong to the Reserve Bank. It's the government's equity. And certainly, it ultimately is an asset of the government. Now, beyond that, there is a question of how well capitalized the central bank should be. Now, like any entity, a corporation, which does deals abroad, the reason for adequate capitalization is for counterparties to believe in the strength of the Reserve Bank and to think that they will the Reserve Bank will honor promises it has made. For example, when we did the swap deal in 2013, it was a commitment by the Reserve Bank that it would honor those swaps. And without the kind of equity that we had backing us, it would be difficult. So the board, in my time, essentially decided that a viable sort of level for the Reserve Bank would be to have a AAA credit. Why AAA? Because India itself has a country rating of BAA, and so relying on the country rating would give us very high cost financing if we ever went out to get that financing. Instead, we should have a balance sheet which is itself cast iron and capable of raising money in dire need from outside with a AAA rating. So that was the decision of the board. And since then, we've tried to put out an analysis of what it would take to get that AAA rating. So that's one, the creditworthiness of the Reserve Bank. Second, what can it pay out as dividends? Well, the accountants, especially a really respected one like Mr. Maligam, who used to be on the board, told us that you cannot pay more than the realized profits. So that is number two. You have to realize the profit. You cannot just pay out what is not realized profit. So, for example, the gains on the assets, the unrealized capital gains, which is a big part of the RBI's equity, which comes from the foreign exchange assets we hold, we just can't pay it out like that. That's number two. The third, which is the least understood but perhaps the most important in constraining the RBI, is that every year it can only create so much money. Now, beyond that, essentially additional monetary creation would be inflationary. So every year we set ourselves a target, and that is the money that is used to buy OMOs in the market and essentially provide indirect second-hand financing to the government by clearing space in market balance sheets for them to buy government bonds. Now, the reality is that amount is limited. If today, let us say the government wants a 3 lakh crore dividend, and that can be realized based on the first criterion that there's enough in the balance sheet, and two, that we have profits which allow that payment, it still will hit the third criterion, that we can't create 3 lakh crores of additional money without selling government bonds in the market to take it back, because otherwise it would be inflationary. The bottom line is there is no free lunch here. There is no additional money the government can get, because whatever we pay will have to be taken back beyond that profit that we pay to them as dividends. So by all means, there could be a debate about whether the entire profit is paid or some is held back. My guess is that with the recent depreciation of the rupee, the balance sheet is healthy enough. Remember, we hold dollar assets. So the balance sheet is healthy enough that possibly the entire profit could be paid. But whether there's an additional windfall, I'm afraid that these constraints actually prevent that.
Okay, so that's the word coming in from ex-RBI Governor Raghuram Rajan. But let's move on and talk about some other news then. In what is evidence of a pickup in the health insurance space, CNBC TV 18 learns from sources that two of the largest financial conglomerates are set to make a big splash. Now, this after Reliance Capital also established its health insurance subsidiary. Yash Jain is getting us all the details. Yash, which are these two conglomerates and by when will they begin operations?
Well, absolutely. The standalone health insurance space is one space which is just getting the right business interest from all corners, be it players who are already present in the life and the general insurance space or the players who've so far kept themselves away from the insurance space. The latest that we're given to understand here is that there are two new major financial conglomerates who are planning to enter the standalone health insurance space. These two players are Murugappa Group as well as Bajaj Finserv. Now, as far as Murugappa Group is concerned, what we're given to understand is that the group has already filed its papers for its standalone health insurance business with the insurance regulator IRDA. The regulator is considering that particular application, and it is a very strong possibility that Murugappa Group will have its first level approval or the R1 for its standalone health insurance business in the upcoming IRDA board meeting. Now, as far as this particular subsidiary is concerned, it will be formed under the general insurance subsidiary, which is Cholamandalam MS. Of course, a wholly owned subsidiary of Cholamandalam MS and the parent, which is Cholamandalam MS, is a joint venture between Murugappa Group and Mitsui Sumitomo. As far as the second group is concerned, Bajaj Finserv, here we are given to understand from our sources in IRDA that Mr. Sanjeev Bajaj, the chairman of Bajaj Finserv, has expressed an intention to the insurance regulator to enter the standalone health insurance space. The idea is to establish a standalone health insurance subsidiary under the general insurance business, which is Bajaj Allianz General Insurance, which again is a joint venture between Bajaj Finserv and Allianz Group. So, of course, two important conglomerates entering the health insurance space.
Okay, that point is taken, Yash, but we recently saw Reliance Capital entering the standalone health space, and according to your story, two more players, and that two big ones, are entering the same space. What is really driving the interest?
Well, as you rightly pointed out, a very strong interest for the standalone health insurance business in India right now, and for obvious reasons. I'll just take you through a couple of very important reasons why we are seeing this increasing interest amongst the business community as far as the health insurance space is concerned. The first one, of course, health has become a very significant portfolio as far as non-life insurance companies are concerned. The second biggest portfolio after motor insurance. The kind of growth which we've seen here in terms of premium, of course, 741 crore was the premium about 10 to 15 years ago. That has grown to an amount of about 37,000 crore. And for the next 5 to 6 years, there are various reports suggest that the standalone health insurance space is expected to grow anywhere around 25%. Apart from that, pricing discipline, that was one point which the sector was lacking so far. There was the problem of predatory pricing, but now there is more and more pricing discipline which is coming in the sector, which is making it more attractive for players as far as a business perspective is concerned. Apart from that, from the government's perspective, there are various schemes. The biggest out of them, Ayushman Bharat, various state-sponsored schemes which gives them the whole idea that insurance penetration will get a very strong fillip as far as these schemes are concerned. And last, but of course, one of the most important things, as far as standalone health insurance space is concerned, there are just about 7 players in this particular space as compared to the life insurance industry, where we already have about 24 players operating their business.
Okay, so a lot of factors really attracting the players to this key standalone health insurance business. Thank you, Yash, for getting us all those details. But as the festivities ring in, most of the major banks are providing mega festive offers. SBI, IndusInd Bank and the likes are going all out to woo customers this festive season. Ritu Singh joins us now to share all those details. Ritu, what is in store for customers like you and me?
The festive season has started and so has the season of offers and discounts, and banks are going all out to woo customers this Diwali. So if you're a State Bank of India customer, you can enjoy this Diwali by converting to a FlexiPay EMI on your credit card payments. Or there's good news for pension holders as well, with the bank waiving off the processing fee on all pension loans. It is also offering festival loans of 5 to 50,000 rupees at attractive interest rates and zero prepayment charges. If you are an IndusInd Bank customer, you can win an iPhone 10 by being the top spender during the offer period, or you can win an Amazon Alexa by being the top spender during the day. They're also offering gift vouchers worth 500 to 1,000 rupees on various transactions that you undertake. If you're a Yes Bank customer, you can earn 5 times the reward by shopping using the Yes Bank card on Amazon, Jabong, Big Basket and their various other large partners. If you are the top spender on the debit card during the festive season, you could even win a paid holiday to Singapore for 2. There's also special discounts on auto loans as well as personal loans. For ICICI Bank customers, there's a 20 times reward points if you use internet banking for all your purchases. They're also offering cashbacks and discounts across the major brand partners. Punjab National Bank, for instance, is offering a 0% processing and documentation fee for home and vehicle loans this festive season. And HDFC Bank is offering loans against securities and mutual funds at a flat processing fee, as well as offering discounts on their home and personal loans. So that is some of the offers on display. You go ahead, enjoy these discounts and have yourself a very happy Diwali.
Thank you, Ritu. Yes, we'll do that. Go out and spend a lot over this festive season. But let's slip into a short break on that note. Manisha Gupta will join us on the other side with all the action from the currency and commodity space.
Let's chat commodities now, where we have seen the volatility continue as you are looking or waiting for the US Fed meeting in this week and also the US midterm elections. And ahead of that, much of the traders or investors have been on the sidelines, and you have seen lower volumes and very limited price moves really in many of these commodities. For the crude oil prices, after nearly 18 to 19% of a decline that we have seen in the past month, today is yet another day that you have seen the declines continue. It is all about the US sanctions on Iran and how that is expected to play out. As of now, we understand that 20 countries have zeroed out imports from Iran, and 8 countries, of course, have been given waivers until the next 6 months, and that is when they will have to completely bring down their imports from Iran. So as of now, the supplies are much higher, but going forward, the kind of statements, supplies, demand estimates that we would continue to see is something that would drive the crude oil prices. In the meanwhile, it has been a good couple of days for the gold prices, where we have seen some weakness in gold. The rupee depreciation actually boost up the gold prices yet again, especially for the Indian markets there. So holding firm there, and it is the uncertainty in the international markets which also has led to some buying in the global space as well. And in any case, this is a quarter where it's not just about the festivities and wedding season in India, but the Christmas and New Year gifting and buying in gold, that in turn also is supportive for that one. On your screens, 1/4 to 0.5% of gains for the silver and gold prices. Pritam Kumar Patnaik from Reliance Commodities now joins us with his strategies on that space. Pritam, hi. Happy festivities to you. Let's start with precious metals on that note. And what is your sense with the kind of buying that we are seeing in both gold and silver? Would you continue to hold your longs?
So, I mean, we were looking at 2-3 events which are going to kind of unfold in the next 2-3 days. One is the obvious one of the midterm elections. And the outcome of those elections will basically kind of decide how the equity market would move in the US, the dollar index, and then definitely the impact of that on gold. As things stand today, there's a kind of a split, you could say. They're saying that the Republicans look at retaining the Senate, whereas the Democrats seem to be sweeping the House of Representatives. The probability of that Democrats taking in both the House of Representatives and the Senate looks highly unlikely. But if that would happen, that would be very negative for the US markets and the dollar index, and that could give a support to the gold prices. The second event that we're looking at is obviously the upcoming, Fed meet, which is there. It's widely expected that the Fed is going to keep the interest rates unchanged. But what is going to be more interesting to watch is the commentary that follows. If there is a hawkish tone to the outlook, that could be again positive or negative for the gold. Correct, because the interest rate could increase.
But, Preetham, I know these are all near-term cues to keep an eye on that can keep the prices quite volatile. But, most of the reports that I've been reading and experts that I've been talking to do say that accumulation in gold is a good idea. And by next year, same time, we perhaps could be standing on good profits or returns. If you've had the time to look at longer-term fundamentals or charts, would you agree with that?
Correct. So let me put it like this. The view we are putting is for a medium to short term. In the long term, I always look at it and profess the allocation towards gold, for sure. Highest level that it is. At some time, this is ought to correct, and that could be a point where gold is interesting. But just two data.
All right, Preetham, we seem to have lost audio on you, but we got that point right, that for the longer term, it always is good to start putting money in gold because the fundamentals do stay strong and gold does continue to provide you a safe haven asset, even a portfolio diversification. When you look at the equity markets, inflation, or even a currency market, gold even now in the Indian space is up by 8% in last 1 year and is expected to give that much of a return for the next year as well, if not more. So with that, is what accumulation or buying in gold, of course, is being recommended.